Hi, this is Pat with Energy Solution Partners sharing with you our energy market view on Saturday, June 3rd. Keep in mind there is a risk of loss when trading commodity futures and options. I'm going to label this presentation What Oil Glut. And anytime you hear anybody talking about the energy markets in the news, we continue to hear about this huge oil glut that we have in the U.S. and around the globe. And I guess as we drill into some of these numbers, I guess I'm not totally buying into this being the case here. And we'll get into some of the data that we have here in the U.S. and see what these inventories have been doing. But at first blush, it does definitely look like there could be an oil glut. When you look at current inventories at about 510 million barrels here in the U.S. And the first item I want to look at drilling into that is the Strategic Petroleum Reserve, or the SPR. Something that's happened here in the last couple months, we have drawn 8.5 million barrels out of the SPR with really no mention of it in these news circles at all. But if it weren't for that 8.5 million barrels that's been drawn out of the SPR, our inventory levels would actually be, of course, lower than they are today, but below a year ago levels. And there was authorization for the release of 10 million barrels in the SPR to do some maintenance within that. So we are getting toward the end of that drawdown. But again, if this 8.5 million that's been taken out of the SPR was taken out of regular inventories, we would have seen draws much more substantial than what we already have seen. And one reason for these draws, the crude oil that is input into refineries, you can see kind of some seasonal history here and where we are today. Uh, this past week's report showed 17.5 million barrels per day going into U.S. refineries, and these refineries are running at 95% capacity, which is pretty much all out. And even with the refineries running at these type of rates, we've continued to draw down gas and diesel in this same time frame. So the demand has been very strong. And that's part of the story that we don't hear a lot about either. So I guess something to keep an eye on here as we get into the summer months, and especially with the heavy summer driving season. Looking at the crude oil build since the first of the year, and starting at 0 barrels and then building from there until we start drawing in the typical summer time frame. The red line is this year. We did build 50 million barrels into inventories up until the middle of March, when we started to draw the inventories down, when the refineries were coming out of their turnaround season. And again, this crude oil started going into the refineries to make gas and diesel. And this mid-March timeframe to see crude inventory start to draw was much sooner than we have typically seen, as you can look at the previous years. The green line is a year ago, so you can see we built this same type of inventory up until the middle of March as we did a year ago. But last year we continued to build and did not start to draw down till we got into the May time frame. So our drawdown is already way ahead of the pace that we had last year. Going back to 2015, and that's when crude production was really ramped up here in the U.S. Before the price collapse. And that year we had built 110 million barrels before we started to draw down in the summertime frame. So this year, compared to 2 years ago, we built at half of the pace. And one slide I like to share is the days of supply, and this is an overall snapshot of the fundamental picture with total crude oil inventories divided by the inputs going into refineries, and this is on a 4-week average. And you can see we did start at 34 days of inventory as we built supplies up in the typical build season, but we've seen a really drastic rate of decline in the number of days of inventory here over the past 2 months now, again, as these refineries have cranked up. And so if we continue at this type of pace, we will see the number of days supply, get back down where we were 4 or 5 years ago. And so that definitely does not look like a glut when you see this type of setup. Here is a chart of U.S. crude production, and we definitely are adding production back in the U.S. Since we bottomed out last fall, we have added nearly 1 million barrels a day again. But as you can see from the previous slides that I shared with you, this is being pretty well absorbed into the market. And with increased demand, with a fairly strong economy going, plus the 1,000,008 barrels per day that OPEC and non-OPEC countries have agreed to in cuts, this increased U.S. production is being absorbed into the market. Well, I can't get out of here without sharing one slide on some technicals, and this would be a daily diesel chart. And just looking where we've been here over the past month, we did have a really sharp rally from the 1st of May to the end of May, and you can see how quick this market can react, where we had seen prices jump 25 cents a gallon. Since we peaked out now, we have pulled back. We've hit some real key retracement levels on technical indicator, the 61.8% retracement of this increase. And we'll see how we trade early in the week here. If that holds and we continue higher from here, it's going to sure look like a short-term bottom was put in again, and maybe a good time to look at covering any fall needs that you may have. The other item associated with this is the stochastics, which measures when we're in a overbought or oversold territory. Again, as we ran up through the month of May, we did get overbought. It definitely looked like the market was due for a correction, which we did get. Now we're starting to trend down into this oversold territory. We're not completely down there yet, but again, with the retracement levels that we're looking at, some of the open interest numbers that we're looking at, it does look like we are ripe for a turnaround in this market. So I guess if there's any interest at all in looking at fall numbers, or even start nibbling at next spring contracts, definitely give us a call and we can go over your strategies with you. So with that, I appreciate your time, and if you want to go over any of your needs at all, feel free to call and we'd be happy to have a visit with you. Thank you.